this drop yesterday in Bitcoin, you know, we're all looking for where's the next big pullback so that we can load up for the next big swing higher. And we're all looking for this to be sort of a big, hopefully, a big wave one rather than, you know, part of a bigger correction. And this wave one to be part of wave three. It would be great if the rally that we had from December 2018 was our big wave one, and this is wave three starting again. So the whole point of what we're all trying to do here is find out when this pullback is over so that we can buy it for the big powerful wave three, isn't it? Well, one of the rules that I have, you know, about that is the 236 fib pullback and stuff, and I want to know, I'm not sure, having watched how we've held support last night, that we have even broken down yet. And I tell you why. I'm going to take my moving averages off, and we'll put that wedge back on. And so with some help, I have labeled this, and I think that we are, instead of this being our ABC correction and we were complete here, I think that we've got one degree up to go, so we're in wave 5. And very often wave 5s can be rising wedges, and they can extend quite a long way. You know, there's quite wave 5s, you know, almost have no rules. They can really extend a long way beyond the other waves. But in this case, I think we're a little bit limited, and the reason I think we're a little bit limited is there's one rule that you can't break. You know that in Elliott Wave they have guides and they have firm rules, and there aren't very many firm rules, and there's lots of guides, but one of the firm rules is that this wave 3 in the middle can't be the shortest. So if this is what we're doing, and we measure 1, 2, 3, 4, and we've got the 5th wave of this rising wedge to come, then this one in the middle here can't be the shortest. So if I measure it like this is A1, A, like this, you can see that we didn't quite meet the equal measured move target at 10,570. So that means that this wave at the moment is shorter than wave 1. And so that means that our 5th wave can't be shorter than this wave 3 in the middle. And so we've got limited upside for our next leg higher. We can't go below 10, here at Deribit prices, we can't go beyond, let me measure it exactly right. I haven't got my magnet tool on. Thank you, TradingView. Here we go. Now we've got it. Can't go beyond 10,886 if I've measured it right. 10,850. We can't go beyond 10,850 here at Deribit. So we've got limited upside. So it looks to me like we're going to do one of those BART patterns where we make a marginal new high and then drop. What would that marginal new high be against? Well, it's against these highs that we made, if we look left, in October 2019 and in February this year. So at the moment, our yearly high is up here. The high is 10,000. Hold on, I haven't got the wrong candle here. Here we go. 10,552. So I think we have maybe a little look beyond that level or tag this level. And so if you're looking at buying it here against the bottom of this wedge, which I think is not a dumb idea, then that's where our target is. Now let's go and take these off. And we'll put our moving averages back on. And okay, and we'll see why we're bullish. Now, ideally, we would like to see a close today or Monday above this 20 moving average and more than 50% up of this big red down candle. That would tell us that we have reversed the trend, but we're looking now for signs that we have. And for me, the first sign that we have is that we're back above this 4-hour 200 moving average. We're back above these lows here, and let's take that away. We can leave that for now. Most importantly, from this high to low swing, the 236 fib for me says whether we've done it or not. Let's do that. And there it is. So above 93.71 here, and this low and as long as we can hold it. So there is going to be a pullback and a retest. There's always a pullback and a retest. It may only be shallow now that we're back above this 200 moving average on the 4-hour, and that's what I'm looking for. One more swing higher in this rising wedge. Now, I should also point out something that most Elliott wave people won't tell you is fifth waves very often fail. And a failed fifth is quite a bearish thing. So it may be that we don't quite make that new high when we rally all the way up here. So we should be, remember it's the last leg of the last wave. And then once that is done, I think that we'll get our bigger correction. And we would normally expect this to come back to the bottom of wave 4 at least, which would be back to this 200 moving average and back to our 8,000 level. But it could be, 50 to 61.8. We could also see a bigger pullback from this. So we have to be open to it. But that is, I think, is when the bigger correction would come. So if we came 50% back, we would come back to around 7. It depends how, if we reverse where I think we will, 50% back would be 7,200, something like that. So that's how I'm seeing Bitcoin this morning. I think if we get a nice pullback entry or a retest of the lows, that we have potential for a nice rally. And I think it might be quite squeezy because a lot of people might have been shaken out. So it may be that we don't come all the way back and retest the lows here. So that's what I'm looking for in Bitcoin today. I could be wrong. How would I know if I'm wrong? Well, if we break these lows, let's put our ABC measurement on where we were looking for in our correction, because that gives us the level where we're wrong. Okay, if we get a daily close below 92.86 today, that's our 61.8 level. I know it looked like we did it yesterday, but if we close back below there today, I think we're headed lower too, and this is not the rising wedge that we think it is. So there we are. I'm a little bit bullish for a retest of the highs and probably a marginal new high in Bitcoin, and then we'll see where we go from there.